Welcome back. Earlier today, we did receive our employment figures. Today's employment numbers look good, unless we dive into the details. We're going to talk about non-farm payrolls, the unemployment rate, average hourly earnings, the labor force participation rate, seasonal analysis, and the Fed funds futures, which actually have moved. CNBC reports U.S. payrolls increased by 216,000 in December, much better than expected. The expectation was actually only around 170,000. Here we see 216,000. That looks good. It's the best in the past 3 months. But on a year over year basis, we're still down 10%. We want to see these numbers improve. Comparing December of this year to December of last year, we're down. We can consider the unemployment rates held at 3.7% compared to estimates of 3.8. We want to see the unemployment rate go down. Well, it did stay flat, and that's better than expectation of 3.8%. Unfortunately, on a year over year basis, unemployment is actually up 5.7%. Not good at all. We take a look at average hourly earnings. They rose 0.4% on a month over month basis, 4.1% on a year over year basis. That chart looks good. This is actually one of the bright spots of the report, up 4.1% year over year. Earnings are going up slightly. We can consider, of course, the labor force participation rate fell to 62.5. Now, this is the lowest level since February. It's down 676,000 on a month over month basis. We don't even have to dive into the details. This does not look good on the surface. On a year over year basis, up 0.3%. We want to see more individuals within the labor force. This number has been very, very stubborn. Now, break down the non-farm payrolls into the subsectors. We have the green bar, non-farm payroll down 20%. We have non-farm payroll goods down 39%. And of course, we have the services down 4%. The services in particular, it's a very important part of the economy. It's a service-driven economy. All these are still negative. Take a look at the non-farm payrolls good, the blue bar, worse off than we were this time last month. CNBC also reports that the jobs report could fuel notions that the Fed may not cut rates as much as the market expects. Now, this is in terms of the January meeting. Well, this is a March meeting. First off, 67% chance that the Federal Reserve will cut rates in the March meeting. The January meeting, almost no chance, 6.7%. What does that mean, though? The red bars show us the chances, and this is in terms of the next meeting, a 94% chance the Federal Reserve will keep rates unchanged at the current 525, 550. There's only a 6% chance again the Fed will cut rates. But take a look to see how the futures have moved. Even going back a week, there was an 18% chance the Fed would cut rates in January. There was only an 82% chance the Fed would keep rates where they are right now, 5.25 to 5.5. But because the jobs numbers, and not only today, we've spoken about several different measures of jobs this week. Take a look back at our videos, the JOLTS report, the ADP reports. They have not been that strong, especially in manufacturing. So the fact of the matter is that the jobs numbers do not show us a tremendous strength in the economy, but there's a notion that the Federal Reserve may need to keep rates high, maybe because inflation is persistent. They want to cut rates if they think that, well, inflation, that issue is off the table. But the jobs numbers have been weak, but inflationary reports and other factors are not moving the Fed very quickly in the direction of cutting rates. Higher rates for a long period of time will weigh on the economy. And I think that's why today's numbers and other numbers also do not look so hot. As a reminder, by the way, please visit our brand new Twitter page, Just the Data. It's our daily technical trading journal where we recap our major market indices, equities, commodities, fixed income, cryptos, etc. Now we also take a look at ETFs, the major sectors represented within the S&P 500, and we look for reversals, trend continuation, breakouts, things of that nature. It's something new we've added. It's very fun, and we update it on a daily basis. So please visit us on our Twitter page, Just the Data. We hope this has been helpful. We look forward to seeing you back soon.